Mark, let's take right away and go into the word of the day, because it is vis-a-vis the Fed and interest rates, inflation data, and everything else. What's the word of the day for you?
Neutrality.
Okay.
We hear it all the time. It's all the Fed speak. All they're talking about is getting rates closer to neutral. Specifically, Powell talks a lot about normalizing rates, going back down to where rates are not holding back the economy, but maybe goosing the economy. But the challenge with that is that we don't know what that rate actually is. And when you have a hot print like we had yesterday on the GDP revision, that makes you question whether rates are restrictive at this point or not, right? So yesterday's number implies that rates are not as restrictive as maybe the Fed thinks. That has big implications on what the Fed is going to do next.
We've seen a market that has pulled back. A lot of the cooling off has happened in those high-flying AI-type names and whatnot in the last few days. How much do rates have to go lower in order to keep this market going higher?
Well, I mean, the question is if we're asking from a financial standpoint, they don't have to go lower, right? These stocks that are doing well should not be impacted by rates, right? So whether or not Nvidia sells as many chips next quarter or not has less to do with rates. However, the market certainly is expecting it, and the market would like to see it, and that certainly would help and provide a little bit of tailwind for the market. So I think at this point, market's expecting something like 1 to 2 rate cuts before the end of the year. We're kind of in that ballpark, too, but that could be changing based on these recent hot numbers.
All right. As a CIO, you're constantly looking at this push-pull, this kind of pros, cons, value, growth type argument. As you look at the balance and the way it's tilting, where in the market are you finding the most attractive opportunities right now?
Well, we still like growth stocks. I mean, the growth stories, especially, there are a lot of good growth stories out there that are very solid, and the fundamentals support them. You're still looking at companies that are growing, EPS over 50%, and there's plenty of companies in that growth area. Look, value looks nice. We're always looking for value, but with some growth, and it's harder to find those stocks at this point because some stocks are pretty overvalued.
Let's put up that mystery chart. Take us through what it is and why you're investing.
That mystery chart is Ares. So we've liked Ares for some time now. The beautiful thing about Ares is that it's really embracing that next wave of finance, right? So the traditional finance historically has been balance sheet finance from large banks, the ones that we all know and love. But the market's moving more toward private financing and private credit. And Ares really is on the forefront of that. What makes Ares interesting is it's a fee-based business, right? So it's asset-light, which means they raise money and they invest it, and they're charging fees. And you're looking at 20+% growth quarter over quarter for EPS, and that's a really exciting looking story for me. There's lots more upside. They continue to raise money. There's lots of requirement for financing at this point with AI and the build out, and they're really at the forefront of that. So we like that company.